Okay, let's unpack this.
Let's do it.
For this deep dive, we are looking at the financial reality here in the United States, and what we found is, well, it's a picture of profound contradiction.
It really is. You have these surfaces of stability, but right underneath, there are some deep, deep seams of vulnerability.
Exactly. We're looking at everything. Personal emergency savings, why so many people are, walking a financial tightrope.
And then there's the systemic stuff, the failures in education, the truly staggering amount of money that's just vanishing because of fraud.
Yeah, that fraud number is something else. So for our source stack today, we've got a pretty comprehensive view.
We do. Our whole analysis is really grounded in the Federal Reserve's newest data. That's the 2024 survey of household economics and decision-making. Most people just call it the SHED report.
Right, the SHED report. And we're also pulling in industry best practices and some really critical educational research from groups like 4-H.
And leading academic journals, too. It gives us that 360-degree view.
So our mission today is, I think, pretty straightforward. We need to grasp the scale of this vulnerability.
For sure. And then understand the literacy gaps that are affecting everyone from, high schoolers to small business owners.
And then most critically, we want to deliver some concrete strategies for survival, for resilience, for growth. We're talking about an economy where the cost of being unprepared is measured in tens of billions of dollars.
So to start, I think let's use that SHED report to just establish the baseline. What's the current financial equilibrium?
Okay.
The headlines, at first, they sound kind of reassuring. In 2024, 73% of adults reported they were doing okay or living comfortably financially.
And that's pretty steady compared to last year.
It is.
Yeah.
But it's also down 5 percentage points from the high back in 2021, so there's a slow leak happening.
Wait a minute, though. Let me jump in there. If nearly 3/4 of Americans say they're doing okay, but we know a huge chunk of them can't easily find $400, doesn't that suggest that our collective definition of okay is maybe fundamentally broken?
That is the perfect question. And that's where the famous $400 test comes in.
The ultimate reality check.
It absolutely puts that headline number into brutal context. So when they asked people if they could cover a hypothetical $400 urgency expense, 63% of adults said they'd use cash or something like it.
Which, okay, that percentage has been basically flat for a few years.
It has. But it's the other side of that coin that's so telling.
The downside is what we really need to focus on here.
Precisely. 13%. On 3. 13% of all adults said they would be unable to pay a $400 expense by any means.
Wow. Just think about that. That's 1 in 8 people financially devastated by a minor car repair or, a sudden medical bill.
And that fragility, it extends into long-term planning too. Only 55% of adults have set aside enough money for 3 months of expenses.
And that's an emergency fund.
Right. And that figure is down from 59% just 3 years ago in 2021. People are eating into their safety nets.
And you can trace that loss of resilience, I'd imagine, directly back to all the economic pressures we've been feeling.
No question. 60% of adults said that changes in prices, inflation, basically had made their financial situation worse.
And what did they do about it?
Their defensive behaviors show real economic stress. 63% switched to cheaper products.
Okay, that makes sense.
46% delayed a major purchase, and maybe the most concerning for the future. 43% reduced or just stopped their savings altogether.
So this isn't just about general belt tightening. What the data is really showing us are these deep structural fault lines.
Yes. The inequality that persists across education and race is, well, it's stark and it's stubborn.
Let's dig into that.
Okay, so if we look at education, the financial well-being gap has actually gotten wider since 2013.
Wider? How so?
Adults with a bachelor's degree or more saw a 10 percentage point increase in reporting they were doing okay.
So they're pulling away.
They're pulling away. Meanwhile, those with less than a high school degree, they've seen no lasting gains at all over that same decade.
That's incredible. It suggests financial success is, increasingly gated by access to education.
It really does. And when we overlay race and ethnicity, those disparities are even more entrenched.
What did the survey show there?
It showed 82% of Asian adults and 77% of white adults reported doing okay or living comfortably.
Okay.
Now compare that to 65% of Black adults and 63% of Hispanic adults.
So when a sudden high-cost emergency hits, the data just clearly shows who is less prepared to absorb that shock.
And this is the critical juncture. If the outcomes are so uneven, the next logical question has to be, how much of this is driven by a lack of financial knowledge?
Right. Which takes us right into the literacy gap. And this isn't just, a personal challenge for people. It's a huge economic one. It impacts the viability of our entire small business sector.
Absolutely. The appetite for this knowledge among younger Americans is enormous.
Oh, it's huge. They're ambitious, they're digitally native, and they are actively looking for trustworthy information.
And where are they looking?
They're flocking to social media, FinTalk, as it's often called. They're trying to fill that educational void themselves. It's a massive demand signal.
And that demand just confirms that this gap can't be bridged by relying on traditional education alone.
No way.
Schools are struggling to keep up, which makes these cross-sector collaborations, bringing in nonprofits, government, industry, absolutely essential.
And the stakes get even higher for entrepreneurs. Financial literacy for a small business owner, that goes so far beyond just balancing a personal checkbook.
Oh, it's a different universe. It requires operational mastery. Sophisticated skills like cash flow forecasting, analyzing financial statements,
and navigating the crazy complexities of regulatory compliance.
For a small business owner, that knowledge is very often the difference between success and a catastrophic early failure.
The stats on that are just brutal.
They are. Nearly 20% of new businesses fold within their first year, and about half don't survive beyond 5 years.
And that attrition rate is significantly steeper for Black and Latino-owned businesses.
It is. And research frequently points to inadequate financial education and then the mismanagement that follows as a primary cause.
So it's not just about having a great idea, it's about having the fundamental accounting and financial skills to actually execute it.
And compounding all of this are systemic barriers. Data shows Black and Hispanic entrepreneurs are significantly less likely to have received formal financial education compared to their white counterparts.
So the education gap translates directly into an economic disparity.
Directly. And then even when the government provides really excellent resources, accessibility is still a major hurdle.
You mean like the digital-first tools from the CFPB?
Exactly. They sound great on paper, but the Government Accountability Office, the GAO, highlighted that limited broadband access really restricts the reach of these tools in underserved communities.
So you can have the best digital curriculum in the world.
But if your target audience can't download it or stream it efficiently, it's a failure of delivery. It just reinforces the inequality that's already there.
But the good news here is that we're starting to see successful models emerge from these collaborations, models that offer a clear path forward.
Yes, focusing on cultural and technological competency.
So let's talk about some of those.
Okay, take the youth model. A great example is the 4-H Smart Sense program. This is a really robust partnership between 4-H educators, specifically the University of Nebraska-Lincoln Extension, and the Charles Schwab Foundation.
And they've moved beyond just theory, right?
Way beyond. They've created a practical, hands-on financial literacy playbook for educators. It covers immediate, relevant stuff.
Like paying for college.
Exactly. Paying for college, managing credit card debt, understanding insurance, the things young people are actually facing.
And we're also seeing major municipal action that uses, a physical presence to get around that digital divide.
You're talking about New York City.
Yeah, New York City, under Mayor Adams's Financial Literacy for Youth initiative, they're committing to placing a financial educator in every single school district by 2030.
That is a massive commitment. And they're coupling it with some really innovative programs. Starting in 2026, they're piloting an in-school banking program.
And the FDIC is behind this, right?
They are. The FDIC views this as one of the most promising frontiers for developing youth financial skills, especially in communities that have been persistently unbanked.
And the evidence for this stuff is just overwhelming. I saw a stat that students with access to basic school savings accounts are 7 times more likely to attend college.
7 times. It connects behavior directly to opportunity.
So that's youth. What about for adults and entrepreneurs?
Well, the FDIC and the SBA recognize this need, and they jointly developed the Money Smart for Small Business curriculum, the MSSB.
Okay.
It's a foundational, free, instructor-led program. 13 modules designed to hit all those critical operational skills we talked about.
But these programs, while they're solid, some critics argue they don't go far enough. They don't address the diverse, rapidly changing needs of modern America.
And that is where the proposed framework from the IOSR Journal comes in. They're calling for a truly culturally competent approach.
What does that mean in practice?
It means moving beyond English-only advice. It means embracing multilingual curricula, they specifically mentioned Spanish and Mandarin, to serve the fastest-growing segments of the entrepreneurial population.
And it also demands hybrid learning formats, I assume.
Absolutely. Mobile-friendly digital platforms, plus easily downloadable materials that work offline to get around those bandwidth limits we talked about.
And critically, for small businesses, this stuff needs to move past just basic survival and into strategic growth.
Yes.
That means covering complex topics like leveraging key provisions of the Tax Cuts and Jobs Act things. A lot of smaller, unrepresented businesses just overlook.
Exactly. For example, Section 199A, that provides a potentially massive deduction for qualified business income for pass-through entities like an LLC. Or consider bonus depreciation, which lets businesses immediately deduct a huge portion of the cost of certain assets. Knowledge of these complex tax provisions can literally free up tens of thousands of dollars in cash flow.
And that can transform a struggling business into a thriving one.
That's the definition of strategic literacy.
Okay, so that's the education piece. Let's talk about practical defense and resilience now, especially as businesses and households navigate this persistent inflation and the truly frightening threat of digital fraud.
Yeah, inflation requires more than just marking up your prices. Truist outlines a few key strategies for small firms. First, on supplier costs.
You've got to negotiate.
You have to negotiate aggressively, but also look at forward buying, purchasing critical supplies in advance to lock in costs and hedge against future supply chain problems.
Even if it ties up some working capital.
Exactly. Then on the labor side, constantly raising wages might not be sustainable.
So what are the alternatives?
Businesses should explore flexible options, like using contractors for short-term projects, or consider non-monetary alternatives to wage increases, like investing in training or offering more work flexibility.
Things that can really boost retention and morale.
Right. And finally, cash flow management has to become rigorous. Shore up your collections process. Don't let invoices sit for 90 days.
Get that cash in the door faster.
Yes. Consider accepting more payment types, like credit cards, even with a transaction fee, because liquidity is crucial.
The SBA also stresses the need for these essential financial management tools that move you beyond just gut feeling.
The balance sheet is a perfect example. It isn't just a compliance document. It's a snapshot of your financials, tracking assets, liabilities, and equity.
And it's crucial for projecting your future cash flow needs.
And for quick decisions, every business needs a simple cost-benefit analysis tool, the CBA.
Right, the CBA.
You just weigh the benefits against the costs. Take that hot dog example. If adding outdoor seating costs $3,000 for permits and equipment, but it's projected to bring in $5,000 in new revenue.
Yeah. The CBA makes it a no-brainer.
It clearly favors the investment.
We also need to get foundational here and talk about basic accounting methods.
So important. If you use the accrual method, you record a sale immediately when the invoice goes out, even if the payment hasn't arrived.
Versus the cash method.
Right. With the cash method, you only record the transaction once the money is actually in your hand in the bank.
And the difference is vital.
It's huge. A business owner using the cash method might think their books look great one day, but then get blindsided by a cash flow crunch the next month because they failed to track a wave of outstanding invoices.
It's an illusion of health.
Okay.
Finally, we have to confront the elephant in the room.
Fraud.
Fraud. This isn't some minor inconvenience. It is a direct contributor to the financial vulnerability we see in the SHED report.
The scope is, well, it's frightening. In 2024, 21% of adults reported experiencing financial fraud or scams involving their money.
21%.
And while a lot of high-profile cases involve credit cards, where your liability is often limited, the non-credit card fraud losses are just staggering.
This is the figure that should shock everyone. The net loss, borne directly by consumers from non-credit card fraud after you account for any recovery.
What's the number?
It was an estimated $63 billion last year alone.
Wow. $63 billion.
That money just vanishes from household wealth. It reduces savings, and it can easily push those 13% of vulnerable households right over the edge.
And businesses face risks that are just as severe. Fraudsters are using highly sophisticated social engineering tactics.
Like business email compromise or BEC.
Exactly. BEC, where they impersonate an executive or a trusted vendor. They manipulate staff into making these unauthorized high-dollar fund transfers.
So the defense against this has to be more than just, better passwords. What are the best practices?
They're procedural, and honestly, they're kind of boring, which is why they work. You have to implement strong internal processes.
Like what?
like mandatory dual approvals for any wire transfer over a certain dollar amount.
So one person can't do it alone.
Never. You also need callback and confirmation protocols. That means if you get an email from a vendor changing their bank account, you must call them on a known, verified phone number to confirm the change before you hit send.
And training.
Comprehensive staff training on warning signs and red flags is no longer optional. It's essential operational defense.
So, what does this all mean? Let's tie it all together.
Okay.
We have a huge portion of the population, 63%, struggling with a $400 emergency, and 13% failing entirely, living right on the edge.
And this vulnerability coincides with this massive unmet demand for financial education.
For youth and for entrepreneurs. And then you overlay all of this with the staggering $63 billion that just vanished last year due to non-credit card fraud.
But the good news, as we've said, is that solutions are emerging. Targeted cross-sector partnerships, focusing on cultural relevance and addressing specific needs.
From high schoolers in New York City to entrepreneurs trying to navigate inflation and a complex tax code.
The data tells a really cohesive story. It's a story of collective vulnerability, and it's driven by both external economic factors and these internal knowledge gaps.
So, considering that 21% of adults experienced fraud last year and 13% can't cover a $400 emergency, we have to ask a final provocative question here.
Okay.
Is the greatest single threat to household financial stability the rising price of groceries? Or is it the collective lack of foundational knowledge and systemic vulnerability that allows tens of billions of dollars to vanish every single year through preventable fraud and financial mismanagement?
That is the question. And the answer to that likely determines whether that 73% doing okay figure continues to slide.